Hello, my name is Brian Kelcha with Confidence Wealth, and I am the Advanced Insurance Specialist. Over 35 years in the financial services industry, primarily in the insurance business with life insurance, long-term care, disability insurance, and Medicare. So today I want to talk to you about the long-term care. There's quite a few misconceptions about long-term care, and I want to go over those, what I call 4 myths. Well, typically as people age, their health declines. We often know this. We see this in our parents or other people that we may know. But there are quite a few misconceptions and assumptions surrounding long-term care, and it's important to be clear what we mean by long-term care, because that may encompass quite a different variety of services, both medical and non-medical assistance. Typically, when you're thinking about long-term care, you need to look at what is called activities of daily living. And what I mean by that is those specific activities of daily living are bathing, dressing, toileting, that's if somebody needs to help you off and on the toilet or wiping you, maintaining continence, eating, or transferring from bed to chair or from a seated position to standing up. So these are what they call the 6 activities of daily living. And if for some reason you cannot perform 2 of those 6, then you actually qualify for long-term care, and you'll need assistance with long-term care, whether it be just home health care or possibly even a nursing home. There is also one other feature, and that is cognitive impairment. So let's say you develop some Alzheimer's, or you're at the beginning of Alzheimer's, then that actually overrides all the other 6 activities of daily living. And if you are diagnosed with Alzheimer's, then you do qualify for long-term care. Well, today Americans are living longer, and the one issue is that it's great that we're living longer, but we need to plan. And I'm glad you're here today, because even though this is not an easy subject at all, a lot of people don't want to talk about this, it is very important to talk about this, because as we grow, as our life expectancy gets longer and longer, that means we need to plan for whatever's in the future. For example, in the 50s, a person typically was living for 67 years. A woman was a bit longer, into her 70s. But these days, you can expect for the average life expectancy to be around 85, especially if somebody who meets 65. Quite often, they'll easily make 85, and often into their 90s. So because of this, because also we seem that we're using more gyms, we're working out more, we're eating healthier foods. What that means is people's life expectancy is even going to be longer and longer. You can expect for it to increase. And don't forget, we have modern medicine too. That's also going to cause us to live longer and longer. So as such, it may seem like it's great news. Hey, we're living longer and hopefully with a good quality of life. But it also means that we need to be prepared for maybe before it was 15 years of life expectancy after retirement. Now it's 25, 30, or even longer. So being with us today, we'll be able to talk about those aspects of longevity and also the cost of care. So let's talk a little bit about the cost of care. I wanted to talk to you about this particular screen because in the Los Angeles area, the average cost of care can be quite daunting. What I mean by that is, and these numbers are from Genworth. They're a leader in the long-term care industry, and they put together numbers each year on how the costs of care have been increasing year by year. Let's talk about each different particular amount here. Assisted living facility. That's a facility where you go there, but you mainly need just assistance in terms of maybe eating or bathing or toileting, things of that nature. Home health care is actually when somebody comes in, a registered nurse will come into your home and they'll take care of you 8 to 10 hours a day. Quite often this is done for maybe 5 days a week, because on the weekends, then quite often you'll have friends or family members come and take care of you. Nursing home. So nursing home can fall into 2 different categories. A semi-private room, that's where you have a roommate actually in your nursing home, right there in your room, or a private home. private in terms of you have your private room. So those costs you can see there, almost $95,000 a year for a semi-private room. And then for a private room, you're looking at $110,000 a year. And these are averages. So if you do want a facility that maybe is even above average, you can expect to pay more than these numbers. Cost increases, typically we're seeing about 3 to 4% per year, and that's very, very important because right now, even though we're looking and planning for long-term care, we may not have a need for some 15, 20, or 25 years down the road. So we need to build in the fact that either there's some sort of inflation rider because as the cost of care gets expensive, we want to be able to keep up with it, or pre-plan that and make sure that we are getting enough coverage so that it's congruent with what the cost would be at that particular time. Now let's dive into the 4 myths or the misconceptions when it comes to long-term care. Myth number 1 is, oh, it's not going to happen to me. Well, I hope it doesn't. I hope it doesn't happen to any of us. But statistically speaking, you do have to look at the fact that this most probably is going to happen to you. When we take a look at the chart here on the right-hand side, the bottom right-hand side, you see that 31%, let's call it 30, so roughly 70% of people out there are going to need some form or fashion of long-term care, whereas 30% will not. So, and even the amount of time that you're going to need long-term care can be very different depending on your particular situation. But when we do our planning, we like to plan at least for 5 years because as you can see there, you have 20% of people are needing care for 5 years or more, and then another 20% from 2 to 5 years. So we should be at least at a minimum planning for maybe a 5-year period. The last thing you want to do is find out that your policy or the planning that you've done runs out after just a couple of years, and then you have a need for more long-term care and you don't have a planning for that particular one. So let's make sure that when we do planning that we're planning for a number of years. Myth number 2 is about, okay, who's going to pay for this? And that's a very good question because we already looked at this. And let's go back. We saw the slide is $100,000 to $110,000 a year for a private nursing home. And if you're in the category where you need it for 4 or 5 years, you're looking at $400,000 or $500,000 of cost. So we need to say, okay, how are we going to pay for this? Who's going to pay for this? And some people feel that, oh, you know what, Medicare is going to take care of it. Medicare is going to take care of me when I'm 65. But in actuality, Medicare does not. As we can see here on the slide, that it does not cover long-term care. It will only cover up to a maximum of 100 days, and only if you go directly from a hospital to a nursing home. So most people, that does not happen. Most people, if they're hospitalized, let's say they fell and broke a hip, for example, and they're in a hospital, Medicare does cover those hospital costs. But then they go home. They don't necessarily need to go directly into a nursing facility, or if they do, they go into a nursing facility just for a short period of time while their bones are healing, and then they go back home. So a lot of people don't go from the hospital directly into a nursing home, but instead, for 100 days, I should say, but instead will eventually go back home first before that they need nursing care. And then over time, what happens is then their health declines, and then they end up using home health care and then eventually a nursing home. So don't think that Medicare is going to be paying for your long-term care needs. Please don't go that route. Number 2, Medicaid. Now, some people say, well, you know what? I've heard that if I spend down my assets all the way to $2,000, Medicaid will take care of me. And that is true. You'll have to really spend down all your assets, and you really don't want to have to do that if you can, because then you're destitute, and for 2 reasons. Number 1 is, I know a lot of us out here, we want to give something to our heirs or children or maybe family members when we pass away. And if you're only spent down to $2,000, there's not going to be much for that. But number 2 is the fact that what if I have a spouse and I'm spending down my assets for myself? Then the spouse doesn't have any assets either. And then, of course, number 3 is the fact that you're going to lose control over where you receive care. And what I mean by that is, if you go on Medicaid, it's the state that decides, or the government that decides, where you're going to be getting your care. And typically those places are not even at average, and typically below average. So if you really want to have your final days be in a nice place where you have good activities, we highly suggest not spending down all your assets to get to that point. Let's take a look at the third category here: employer-sponsored plans and private health insurance. You may have seen your employer is offering long-term care for you, and I highly suggest taking a look at that and let us review that with you, because quite often there's going to be limitations. Number one, they quite often act like Medicare, and they have these limited services just like Medicare in terms of how much they're going to pay, or to what extent they're going to pay, or when they are going to pay. So let us review that for you. If they do offer you long-term care, it's going to be typically on a short-term basis. Now, you may say, well, my employer has health insurance. Well, health insurance is not long-term care. Health insurance typically takes care of doctor's visits, hospital visits, maybe you'll see some deductibles, maybe some prescription drugs are taken, but it does not take care of home health care where a nurse is coming in, and it doesn't take care of a nursing home where you're there 24 hours a day, 7 days a week. So please don't get caught up on that myth. Let's get into what I call myth number 3, and a lot of people think they should go this way, but this is myth number 3, and that's talk to you about self-insuring. Well, I got a lot of assets. I'm going to go ahead and self-insure on that. And many people do have millions and millions of dollars, and they may be able to self-insure, but there are some downfalls to doing that. Number one, as we can see here, costs do add up quickly. As we mentioned before, it's $100,000 a year for your average. If you have millions of dollars, then in those cases, a lot of times you're going to want something that's even well above average. I know, for example, they just opened up a nursing home here in Redondo Beach off Pacific Coast Highway, and it starts at $12,000 a month. That's $144,000 a year. So but it's it's a very good medical facility, nursing home. But those costs can add up very quickly when you're talking about 4 or 5 years. Or if you have cognitive impairment, then you're looking at, could be in the 700, 800,000, because you're going to be in there for 6, 7, 8 years if you physically are fine, but mentally you're not. But physically you're okay, but mentally you need a lot of assistance. So be very careful when you start looking at that. The tax liability, a lot of people don't take this into account. Okay, so I'm going to self-insure, and I'm going to use my pension plan money to do that. Well, what happens is when you receive your pension money, that's going to be becoming taxable. So even if you're making, let's say, $100,000 or $150,000 a year from your pension, that's fully taxable to you. So you're not going to net that $100,000 or $150,000 a year. You're going to have to pay what I call the biggest fee on many different investments, and that is the tax on that. And with state and federal, if you're in a very wealthy position, that could be 45, 50%. So understand that if you're using your own personal assets that have not been taxed before, you have a very large tax liability. Well, what if you have investments that are outside of a 401k or a pension plan? Maybe you've already paid your tax putting your money into that. Still, when you take those out, those are going to be considered capital gains, and capital gains are taxed. So when you do take out that money for long-term care, it's not going to be all that you expect, okay? And finally, we already did mention about the surviving spouse. If on the first spouse we're using a lot of your assets to take care of care, what about the surviving spouse? Is she going to now have to really decline her standard of living in order to have enough money to last the next 15 or 20 or years of her life? These are big questions that we need to go over, and we can do that for you. Again, one of these things is work with us. I didn't say it before, but we would want to do the planning for you. We can do this planning for you so that you can rest assured that you have a good plan in place to take care of this potentially very, very financially difficult situation. Now, on myth number 3, I do want to point out one thing, and quite often people that do have millions and millions of dollars, they love this concept and they love this aspect of when you're purchasing a long-term care plan. So let me ask you this question. And please answer it, for yourself. Your doctor says 15 years from now, your doctor says you need long-term care. So who do you call? A lot of people don't know how to answer that question, but with these insurance companies, they do have features, whereas they come together with care coordination services. What I mean by that is you call an 800 number when you have these long-term care plans. You call an 800 number, and they have an entire management team that then works with you and helps you administer the different plans that you have. As you can see here, just to go through a couple of they help you understand your benefits. Looking at the slide here, they go through the claims process with you. Quite often, they will work with the long-term care facility, whether it's nursing home or home health care, and they'll actually get billed directly from them, so you don't have to worry about any of these bills and making sure your invoices are getting sent in, things of that nature. Number three in that bullet point is providing assistance, because there's different long-term care facilities or home health care services, and we want to know, who's got the best or which has different activities. Maybe you like a pool, so you want to have a pool that you can enjoy. Maybe you want to have, the best bingo game or something of that nature, or whatever your activities are. You want to make sure that that facility has those, and they have that information, and they can help you. So they do an assessment for you in terms of the different needs that you want. If we go all the way down, and there's quite a few, and I'll let you read through those, but if we go down at the very bottom, it says monitor your care needs over time. This is very important, because what happens is, as I mentioned before, your health declines as you age. So maybe at first you just need a home care where you have a nurse coming in, and she's taking care of you 5 days a week or 6 days a week or so. But then over time, you may need more assistance, and you need to move to an assisted living facility, or you need to move into a nursing home. Well, in those cases, they will monitor your care over time so that they will help you decide. Now, obviously, you and your family have a lot of input on this, but they will help you, give you advice on what they feel would be your next step on your funding. And I can't tell you, all of this is taken off of you and you're in a vulnerable situation, or it's taken off of your children who are making some of these decisions. They now have an expert in the industry to help manage your care. So this next slide talks to you about the options for long-term care. We talk about self-funding. We're going to go from the left side of the screen over to the right side of the screen. So we talked about self-funding, and we talked about some of the cons on that and some of the disadvantages of self-funding, which, just to summarize, is the fact that taking a lot of that income, or I should say assets, away may jeopardize the spouse. Also, the fact that on some of these plans, or most of these plans, they do have a full management system. So even though you can self-fund, even if you get a small insurance policy with these management systems, you'll be utilizing that on your self-funding. Number two, the hybrid solutions, annuities with long-term care riders. Definitely a good solution. Some of these annuity companies do have long-term care riders on them, whereas if your annuity is X, they'll actually increase that a certain amount for if you do have long-term care. It again is reducing your assets for your spouse or something of that nature, or I should say your spouse or your loved ones. So even utilizing annuities with long-term care, even though on the top it may seem, hey, let's do that, you'll see that there's not as significant a benefit as if we go to the next section, and that is life insurance. Because as you know, life insurance with ABRs is accelerated benefit rider. That's actually where you can buy a life insurance plan. As you know, when you put a premium on a life insurance, you can usually get a very large amount. So if you utilize that, now you get a very large amount of benefit for either death benefit or for long-term care. These solutions are specifically designed that you can accelerate your death benefit for long-term care. For example, if you buy a $500,000 plan and you need $100,000 a year, you can accelerate that death benefit. So if you draw it down $100,000 a year, it would last 5 years for long-term care. If there is anything left in the death benefit after that, that would be payable to your heirs. Okay. The third solution is the hybrid solution. Another one is life insurance with a long-term care rider. Very similar to what we just talked about, life insurance with accelerated benefits, but this actually has a life insurance portion and a true long-term care rider with it. What I might mean by that is that the fact that you do have to go through your life insurance, but then you have an increasing amount of long-term care that can be utilized. Subtle differences between the life insurance with ABRs and life insurance with LTC combos, but when we do meet, I'll explain those differences in detail. And then finally, traditional long-term care. What these are about is it is just straight long-term care. It's not like the life insurance where there's a death benefit. It's not like a life insurance plan where you have cash value. It is true just long-term care. You pay your premium every year. If you need coverage, then great. Then you can they can utilize a benefit. If you don't, then you're out for that year. And if you never use it, then you paid premiums for that long period of time without any benefits. So which one's right for you? I don't know. It would take that we do have a meeting, we talk about what your needs are, and then talk about what your what some of the options are, and match up what your needs are with the different types of plans out there, so we can find a solution that is right for you. I do really want to thank you for taking the time and reviewing this with me. I try to come at it from an educational standpoint, so that once you're educated on these topics, then you can make some good decisions that really meet your needs. So thank you very much. And I truly do feel or want to express my opinion of coming to see me and talking about the long-term care. Planning for this is so very important. You don't want to go into this blind when you're in your, let's say, late 70s or 80s or so. You need to do some pre-planning. So thank you very much, and I look forward to hearing from you. Thank you.